Markets soared today, with the Sensex and Nifty jumping over 1%, driven by the BJP alliance's landslide victory in Maharashtra. The Sensex climbed 992 points to settle at 80,109, while the Nifty rose 314 points to 24,221. Blue-chip stocks led the rally, with top gainers including Larsen & Toubro, SBI, Adani Ports, Reliance, and Kotak Mahindra Bank. However, laggards like JSW Steel and Tech Mahindra saw some declines. The rally highlights investor confidence in political stability and economic prospects. Notably, Zomato is set to join the Sensex, replacing JSW Steel, effective 23 December. Stay tuned for more updates as Indian markets continue to reflect the impact of this political shift. Another reason for the jump in the market today was the rally in Adani Group stocks, fueled by strong backing from global investor GQG Partners. Despite recent allegations from the US Department of Justice and the SEC targeting Adani Green Energy and its directors, GQG reaffirmed its confidence in the group's fundamentals and long-term growth prospects. They emphasized that the charges are aimed at specific individuals and do not implicate other Adani companies. Highlighting Adani's reliance on government-regulated operations and long-term contracts, GQG compared the situation to global giants like Walmart and Siemens, which overcame similar challenges. With continued earnings growth and government support, GQG believes Adani Group remains on solid ground for future expansion. Zomato's shares witnessed a sharp intraday surge of over 7% after the announcement of its inclusion in the Sensex, replacing JSW Steel from 23 December. The stock closed 3.3% higher at 272.9 rupees, marking its best session since August. This rally boosted Zomato's market capitalization to 2.4 lakh rupees crore, reinforcing its strong momentum. Over the past year, Zomato has risen by 136% and 121% year-to-date, showcasing significant growth. Vijay Chopra, CEO of Enoch Ventures, sees even more potential, setting a 5-year target of 800 rupee per share for Zomato. Chopra called Zomato a multibagger in the making, emphasizing its profitability and continued dominance over rival Swiggy. The company's strategic expansion into Tier 2 and Tier 3 towns is expected to unlock new revenue streams. Restaurants contribute up to 30% of their bill value to Zomato, and increased delivery charges will further bolster its bottom line. With strong backing from analysts, 24 out of 27 maintain a buy rating for the stock. Zomato is not just redefining food delivery in India but also solidifying its position as a long-term growth story, making it a favorite among investors. Looking at Zomato's technical chart, we can see a strong upward trend, as the stock has been consistently moving higher since early 2024, respecting a clear trendline support. The recent surge has pushed the stock to 272 rupees and 90 paise, a notable resistance level. The chart shows solid volume patterns, with the green volume bars indicating strong buying interest, particularly during the uptrend. The stock has been forming higher lows, confirming the bullish momentum. With a continued upward trajectory, Zomato seems to be on track to test new highs. The key levels to watch are the 275 rupees and 280 rupee range for potential resistance, while any correction could see support around 250 rupees, which is well in line with the rising trendline. Overall, Zomato's technicals suggest continued strength in the near term. Astral Limited saw a strong performance today, closing at 1,789 rupees and 55 paise, up 1.59% from the previous close of 1,761 rupees and 60 paise. After an initial spike, the stock displayed steady intraday movement with minor fluctuations. The surge reflects positive sentiment, with Astral maintaining resilience amidst broader market trends. The pipe manufacturing sector is showing signs of stabilization, but margin recovery is expected to be slow, says Goldman Sachs. Astral Limited stands out as the brokerage's top pick, with a revised target price of 2,170 rupees, implying a 27% upside. Goldman highlights Astral's disciplined pricing strategy and resilience against volatile PVC prices. The company is also set to benefit from margin improvements in the second half of the fiscal year, driven by reduced marketing expenses and the relaunch of its paints business. In contrast, Prince Pipes has been downgraded to neutral due to struggles with demand recovery and PVC price volatility. Despite some recovery in real estate demand, China's subdued PVC prices suggest a slow rebound for the overall sector. Astral Limited's long-term chart shows a strong uptrend, though the stock is currently consolidating near 1,790 rupees. This level aligns with a key horizontal support zone from past price action, suggesting potential buying interest. The stock had seen a steep rally until early 2024 before entering a corrective phase. The volume data indicates reduced selling pressure near this support zone, adding to the likelihood of a rebound. If the stock breaks above 1,850 rupees, it could resume its upward momentum, targeting 2,000 rupees. However, a drop below 1,750 rupee may lead to further correction. Traders should monitor these levels closely. Reliance Industries closed at 1,290 rupees and 95 paise, up 2.02% from its previous close of 1,265 rupees and 40 paise. The stock showed strong intraday movement, touching 1,302 rupees and 70 paise at its peak. This upward trend reflects positive market sentiment as Reliance continues to dominate as a key player in multiple sectors, boosting investor confidence. Reliance Industries received a significant upgrade from Citi Research, moving to a buy rating from neutral with a revised target price of 1,530 rupees, implying a 25% upside. This comes after a period of underperformance, where the stock lagged behind benchmarks amid a foreign investor sell-off. Citi cited improved risk-reward dynamics, potential refining margin recovery, and Jio's growth prospects as key positives. Despite muted Q2 results with marginal revenue declines, Reliance posted an 11% net profit growth to 19,323 crore rupees, showcasing resilience. The energy segment is expected to benefit from a weaker rupee, while retail recovery and new energy visibility add long-term potential. Analysts remain bullish, with 32 out of 38 recommending a buy rating on the stock. Looking at Reliance Industries' long-term chart, the stock has maintained a strong upward trend, with support from a rising trendline that has held since 2020. Currently trading around 1,290 rupees, the stock is testing a crucial support zone near 1,280 rupees, which aligns with historical price action. Resistance is observed near 1,360 rupees, a level Reliance has struggled to break in recent attempts. A breakout above 1,360 rupees could lead to renewed bullish momentum, potentially targeting 1,500 rupees. However, a drop below the trendline support may signal further downside risk. Traders should watch volume activity around these key levels for confirmation.